Welcome, everyone. Let's dive right into this explainer and completely dismantle the myth that simply spending years in the market automatically builds your trading skill. We see it literally all the time. Thousands of people spend years staring at charts, placing trades, watching tutorials, following the market news, and yet they never actually become consistently profitable. So today, we're going to break down exactly why most traders never improve, even after years of effort, and reveal what the professionals are doing differently to build a genuine edge. Now, look at this question on the screen. Intuition says the 7-year veteran should easily win out, right? But we're going to explore why a 6-month rookie often completely outperforms them. It sounds so counterintuitive. We naturally just assume that time equals proficiency. But in the financial markets, years of trading absolutely do not automatically create trading skill. In fact, time without structure, that can actually be your worst enemy. Here is our roadmap for today's explainer. We'll be covering the illusion of experience, repetition versus deliberate practice, why most traders fail, the power of journaling, and finally, the feedback loop framework. Okay, starting off with Section 1, the illusion of experience. Time in the market does not equal skill. Let's look at a tale of 2 traders to see exactly how this plays out. Take Alex, for instance. He has 5 years under his belt, but he basically trades on intuition, hops from strategy to strategy every few months, and always blames the market when things go wrong. 5 years later, he is making the exact same mistakes, feeling the exact same emotions, and getting the exact same results. Think about it like driving the same route to work for 20 years. It doesn't make you a Formula One driver, it just means you're repeating a behavior. Now, in stark contrast, look at Sarah. Just 1 year in, but she journals every single trade, reviews her mistakes weekly, tracks her statistics, and hones one specific skill at a time. This structured approach is exactly why Sarah is pulling ahead so quickly. And this brilliantly illustrates a core psychological concept from expertise researcher Anders Ericsson. Practice does not make perfect. Perfect practice makes perfect. Without correction, repetition simply makes your mistakes permanent. Just piling up screen time isn't going to cut it. If your practice is flawed, your execution will remain flawed no matter how many years pass on a calendar. Let's move to Section 2, repetition versus deliberate practice. We're exposing the growth gap. Notice the massive difference on this slide right here. Repetition offers 0 feedback. The amateur loop is incredibly short. You place a trade, you win or lose, you move on, and you repeat. There is absolutely no analysis happening there. But deliberate practice, that creates a true systematic cycle of learning. You plan, execute, record, review, identify mistakes, adjust your behavior, and finally, measure the results. That systematic cycle is what actually builds professional skill. All right, Section 3, why most traders fail. The 5 common pitfalls. Read through these 5 common traps on the screen right now. First up, strategy hopping. Jumping from price action to smart money concepts to a new indicator the second you hit a losing streak. That completely prevents real learning. Second, no data collection. You might know everything about your favorite YouTuber's setup, but do you know your own win rate? Third, emotional decision-making, acting on fear, greed, or revenge trading. Fourth, focusing only on the P&L. This means judging trades purely by the money rather than your process. Remember, a bad trade can make money, and a flawless trade can lose money. And finally, a complete lack of review. Imagine a pro athlete never watching their game footage. That's exactly what trading without a review process is like. So, the crucial point is exactly what's written here. The market rewards discipline, not excitement. Letting your emotions drive your inconsistency is just a surefire way to fail. The market really doesn't care if you're thrilled, terrified, or feeling a heavy dose of FOMO. It only consistently rewards traders who execute a disciplined plan without letting their pulse dictate their position size. Shifting gears to the solution now in Section 4, the power of journaling. This is your personal performance laboratory. I want you to literally burn this text into your memory. Data removes opinion, data reveals truth. Without data, you simply cannot improve what you do not measure. A journal forces you to track your entry reasons, your exits, the risk you took, your emotions, and the broader market conditions. Over time, actual, undeniable patterns emerge from this data. It stops being about how you feel a setup works and starts being about what the math objectively proves. Now, what's really fascinating about this slide is how clearly it shows the cost of flying blind. Look at the numbers for this trader. They took 100 trades. The 50 morning trades netted a positive 18R, meaning they made 18 times their initial risk. Amazing, right? But the afternoon trades, they lost 10R. Without a journal recording this, the painful reality of those afternoon losses remains completely invisible. The trader just feels like they're endlessly spinning their wheels. But with this data, the fix is obvious. Just stop trading in the afternoon. This brings us to our final core concept, Section 5, the feedback loop framework, how professionals systemize improvement. See, professionals don't just ask if they made money today. As listed right here on the screen, they relentlessly focus on process over profits. Did they follow their rules? Did they track their numbers? Did they complete their weekly and monthly review routines? They actively track their expectancy, average winners, average losers, and drawdowns. Improvement isn't just a happy accident for them. It is completely systematic through continuous feedback loops. Look closely at these 5 sequential steps on screen. This is the definitive feedback loop that keeps you from operating blindly. Step 1, execute your plan. Step 2, record absolutely every trade. Step 3, review. Honestly ask yourself, why did I enter? Did I follow the rules? Step 4 is identifying your improvement area. And step 5 is measuring again over your next 20 to 50 trades to see if your adjustment actually worked. Now, the absolute most crucial part of step 4 is this giant number right here, 1. You must choose to improve only one thing at a time. Maybe it's better stop placement, or maybe it's smaller position sizing. But do not try to fix 10 things at once. If you try to overhaul your entries, exits, psychology, and risk management all in the exact same week, you are going to overwhelm yourself and fail. Focus on a single variable, fix it, measure it, and then confidently move on to the next. So starting today, I want you to dedicate just 1 hour every single weekend to calculate exactly these 3 specific metrics on the screen: your win rate, your risk-reward ratio, and, most importantly, your rule-following percentage. Let's be real, if your rule-following percentage is low, your win rate and risk-reward are completely irrelevant because your data is already contaminated by impulsive, unplanned actions. Judge your process, not your profits. If you execute your edge flawlessly, the profits will naturally become a byproduct of your system. Remember, most traders don't fail because they lack intelligence. They fail because they repeat mistakes instead of studying them. Professional traders aren't necessarily smarter, they just learn faster, and they do that by using deliberate practice, meticulous journaling, and strict feedback loops. I'm going to leave you with this final provocative thought right here on the screen. Be totally honest with yourself. How many trades have you actually reviewed this month? Measuring, reviewing, and improving today basically guarantees that your next year of trading will be exponentially more valuable than your previous 5. So if your answer to that question is 0, well, you know exactly where to start. Master your psychology, build your edge, and start treating your trading like the high-performance discipline it truly is.